Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the kind of just chop that we're having on the chart this weekend. Basically, an uneventful weekend, and we're all just, on the edge of our seats, waiting to see what happens in the stock market after that nice and sour red day that we did close at on Friday. And if we do go over to our economic calendar, you can see we don't really have that much news that could trigger us too much on Monday. We do have the Empire State Manufacturing Index, and you can see that the forecast is quite bad. And so if this comes in, hotter than expected, right, a better number than -5, then perhaps it could just be an indication that the economy is still too hot overall, because this should go along with Fed predictions, that sort of things. This isn't a really important indicator in terms of decision making at the Federal Reserve, but it is just what's on the calendar for Monday, and could potentially just move the market a little bit in the early hours, assuming it's something radical. Let's go ahead and take a look at the expectation for those Fed rate increases, and you can see that we're essentially at 100% pricing in 75 basis points. Now, the question is, has the market fully priced that in yet, or do we have another leg to drop before the market totally prices that in? So expectations versus having priced it in isn't always on the exact same timing. Sometimes it takes a few days in order for the actual price of the market to catch up to the new expectations. And since we rapidly came from basically half the market thinking 75 basis points to 75% of the market thinking 75 basis points to now 100% of the market thinking 75 basis points, there could be a little bit more downside to squeeze out of this kind of attitude shift in the market. What we do see, however, is that the expectation for 100 basis points has gone back to zero, and it was as high as 10% just a month ago. So this does suggest to me that there's probably a hard floor on how far we can fall just on this next move. Of course, if you look at the charts structurally, there is a huge downside to potentially be had, and both stocks and crypto are on the precipice of a very uh, dangerous drop where there just isn't that much support below them until pretty far down. And so, guys, how the market deals with this is going to be critically important. And for that, let's go ahead and take a look at the charts. And here you can see just my general support and resistance for Bitcoin. This does take us from June all the way to today. And just looking at price action, let's go through a few things. Of course, we have our macro downtrend. I think we can say that we've, definitely killed the first boss. Okay, this thing's done. We are outside of that macro downtrend. I probably don't even need to mention it anymore, unless for some reason we capitulate underneath it, in which case it will make a comeback, and this will all have just been a fake out breakout. However, we do have the second boss that we're still contending with, that half-year long downtrend, and so structurally speaking, our price action is still below that second boss on our macro downtrend. And this one has actually been stronger and even a bit more wicked in how it interacts with the price action at resistance. At least since back here in May, and while we keep testing it, and so that does suggest there is the possibility for us to break through it, we are maintaining that buffer region, and so far we haven't really been able to push against the actual downtrend itself. ever since back in May, and then just very, very briefly here in September when we just absolutely got slapped down. And while we've flirted with it, inside of that kind of danger zone, we just aren't really pushing up to the edge of it. And so this is acting like a force field that's just keeping us down. And I haven't extended this line in a while, but you can imagine that it just bounced right off of that kind of imaginary line. And so that does suggest this resistance is extremely tough in the top half of it, and that while we're just kind of swimming around in the bottom half, just kind of flirting with it, we're just, it's highly unlikely that we're going to just push through it in a sudden push. It is possible, however, and just for, the sake of conversation here, we did have this kind of janky accumulation wedge going on where the bulls really did try with all their might to use this accumulation wedge to push out of this downtrend once, twice, three times, four times, and just four times they have failed. While they had tried to accumulate Bitcoin along this path and hold these lows. Of course, we did get some type of a liquidity grab back here that was expected based upon our kind of rising wedge that we had. We did have an implied measured move had this continued with the final wave inside of it, an implied measured move down to 18 100, 18 200, and in fact we got that implied move. So something was a bit weird about this structure, but I think it's just because of this resistance area. There was no point. Basically the market front ran the move, but still, because the bulls were still there, right? This accumulation wedge was still in effect. They still came back to retest that rising wedge or whatever you want to call it, and of course it got tested bearishly, and then after retesting that wedge bearishly, we're coming back to retest the accumulation wedge, and we're also finding some type of a bearish retest on the accumulation wedge itself. So not only did we have this rising wedge get retested bearishly, but we also got the accumulation wedge tested bearishly, and so that was a pretty nice rejection there. We are just holding kind of the balance of it in this little kind of like a pool underneath this hard rejection. So not much to say about this. This is just a lot of chop, right? This has just been a lot of chop for the last month or so, with a few exciting pushes and pulls, and otherwise, in my opinion, this looks fairly bearish. I mean, if we just zoom out a bit, to me, this just looks like this, right? It just looks like this. Just looks like this. And so, what would I expect to happen? I mean, I would just expect more downside just based on this structure alone. But, and so I'm not going to be trying to catch any trades based upon this price action. This is too choppy, too close to our macro resistance, and I don't need to be in it. Definitely not to the long side. Um, Bias just on that, overview alone would be to the downside. But of course, we could break up here just like we did break above that macro downtrend. We could get surprised and break up there. But let's go ahead and just take a look at. Let's take a look at this rectangle that I've made here for us, just so we can get kind of a bigger picture view on what we might be looking at. You can see that there is this zone up here on our previous all-time high in 2018, 2019 kind of cycle. There was this, high over here at 19,900-ish if you're looking at the Coinbase, and then with the bottom of that kind of blow off top there sitting somewhere around 13,700-ish, which does correspond with basically the retest of the breakdown of that level there in June 2019. And so that was a bearish retest of that level, which then sent us to the COVID lows. However, on our way back up, we did kind of put in this platform that chopped out, kind of grinded out that same area, which we saw ground out, at the top of the blow off top in the previous cycle. And so I would suggest that we did build a little bit of structure in there. And so when you look at the layers that I have in my support levels, you can see that we do have steps that we could potentially take to the downside while we're inside of this yellow box if we're going to walk down it. And of course, if we zoom to our current price action, this gives you a totally new perspective on where we are right now, because what you can see is that we're basically in this box. We're in this box, guys, right? And so being in that box is incredibly dangerous because what do you think is going to happen, right? Like, we can only, bounce off of support and get rejected by resistance, more or less. And so, what are we doing here? Well, if you just zoom in, it kind of looks like we're just bearishly retesting the breakdown. Okay, and so if we go to perhaps the weekly, maybe it will give us a clear picture here. And yeah, I think you can get a clear picture from the weekly, where essentially what we're doing is we broke down here, right? We kind of had a little bit of a panic wick, so just ignore that wick. Then we bounced up, and then we broke down, and what are we doing? We're retesting the breakdown. And what would that imply, Alpha Fam? Let's see if you've been paying attention here. Come on, what would that imply? That would imply we could potentially chop all the way back down to, 14,000, okay? Now, there might be stops along the way, but as long as we're underneath this, this top yellow line for this box that I'm kind of making here for us, then of course, the implication is that we could chop down it. And so how can I be bullish unless we're above that line? So that's going to give you the context for what I'll say next, because as we take a look at price action, let me go ahead and just turn off that path. Let's go back to let's say the 4 hour, just so we can get detail on our price here. And this just gives you a new look at what's going on here, right? And so like that was just panic. This was the bounce off of that support, that previous that previous cycle high, and then we broke down under it again. The bulls really fought not to break under it, and so that's what this weird little spike was that just freaked everyone out. They didn't know what was going on. Look, it was just the bulls trying to resist breaking down from the previous all-time high, right? And then ultimately this downtrend rejected them. That's why I call it the second boss, because it's just as powerful as that first boss, to be honest. And it's really like the second level that we're dealing with. Smacked them down, smacked the bulls down into bear territory underneath this yellow line. Being underneath the yellow line, the bulls tried to retest it. They did successfully push above it, held it for a couple days. Ended up getting smacked down again by the second boss. And here you can see we got smacked down to 18,200. So even lower than this smackdown, right? And so they tried it again, but you know what? They couldn't even push above the yellow line. And so what are we doing? We're basically just testing the midline on that rejection. And guys, what does this narrative tell you? Like just structurally, just based on price action alone, right? I don't even need like patterns or anything to figure this out. I can just have the story of the bears and the bulls, okay? Like in how they're communicating with each other, how they're fighting each other. And you can see that if we get a rejection right here, that's just going to be even more bearish because we can't even get up to that yellow line anymore. And we're definitely not getting beyond the white line. We're only getting up to this white dashed line. However, we are getting a little bit of a push. We do have a slightly bullish engulfing candle, at least for the time being, on the 4 hour, and so we could have a little bit more upside. And hey, you know what? I think that we could push all the way up to this diagonal dashed line. I think that we could push all the way up to this white line. We could even push up to the yellow line. But you know what? I'm still going to be overall bearish because it's just disgusting until we're above that yellow line. Now let's go ahead and just modify this conversation a little bit with perhaps some structure here to just give us an idea of how we were moving. Of course, I did suggest that there was this rising, broadening wedge on a right angle. It did have just this small play based upon this one. And of course, this is an imperfect formation, but it did take us right to that 18,200. And so that call ended up being correct. I did have that arrow down to that area based upon the rising wedge and pardon me, based upon this rising wedge, right? Which I had the arrow coming down into this area. And then, of course, this broadening wedge also suggested it. And so we had confluence for this area to possibly hit. And that's how we could have a little support box there. Well, that doesn't mean that this bearish structure is over. We also have inside of here potentially a head and shoulders, which could have a much bigger downside. And so you guys see I have this, this box down here. This is the second box that I made. So this one already played out. Boom, guys, we got that one. And then there is this secondary one, which is still implied. None of this choppy price action. These are just like liquidity grabs and just chopping around, right? It's just the chop of it. But this is kind of a multi-week head and shoulders, so it could take quite some time to play out. And I would suggest that the target is around 17,250-ish if we do end up playing out the measured move of this head and shoulders based upon this price action. Now, some people can say, "Oh, well, we pumped up here. Doesn't that violate it?" No, because this is the high that we have to take out in order to take out this head and shoulders. This is nothing. This is just a lower high. So this is a high. This is a lower high, right? Here's a low, here's a lower low, okay? So what do we have? A low, lower, high, lower high. What is that? That's a downtrend, guys. We are in a downtrend, okay? So that's what this structure is. I don't care if we're poking up right now. I don't care if we poke all the way back up to that yellow line again. Heck, I don't even care until we poke above 20,500, to be honest, because we're still going to be in a downtrend for the last couple weeks, and there's no way around that, okay, guys? So get it through your heads. Like a couple of you guys just get bullish every time we have any type of a pump whatsoever. You guys thought we were going to go to the moon off of that pump, and of course, we just got smacked down by my yellow line here after grabbing this liquidity box that I have. Well, we have another target down, and I'm still looking at this location until we violate some of these higher levels. The first one that we need to get above is, of course, this kind of diagonal that I have here, which if I just extend it out, something like this, that would be somewhere around this 19,400. And look, that's the bottom of this teal box that I have. So that dashed line and the bottom of the teal box are aligning with each other. So that's a pretty confluent. We need to get above 19,400. And then we need to get above 19,700. There's also this kind of like a mini formation here, 19,800. And then the real one that we have to get above is 19,900. And then we still need to get above 20,500. So there's a ton of work to do just to be bullish. And even if that happens, we have this rising wedge structure that is still there, right? It's still present, which could limit us at around 21,000. And so could we do some type of just like crazy fake out like this and then come back down? Yeah, I mean, that could also be possible. We've been doing a bunch of those things over and over again. So could I suggest that this Is that possible? Yes, it could. Okay, so let's go ahead and just take a look at this using perhaps like some type of waves. Of course, if we do get above that yellow line and above that white line, and of course above this teal box, then we could continue to push up. And I would just suggest that based upon the move from here to here, that we're really going to be looking at yeah, I think 19,800, 19,700. Let's just use 19,700, okay? That's pretty close enough to the 786 here, which is saying 19,750. You know what? Let's just use the fib. 19,750. If we can get above that, and then we can get above that 19,000, let's just call it 900 to get above that yellow line, that box that we've been fighting, then I would say, okay, maybe there's going to be a bigger move, perhaps even up here to 21,000. Okay, like that would be the first stop that we'd be looking for. Of course, we'd be looking to see if we could take out that high at 20,500 at first, but there's a lot of work to do to get into that. What's the easier play here is that yes, we can keep pumping a little bit, like on the hourly here. We can just keep pumping. Maybe we get into this resistance area, and this is just another lower high on this series of lower highs that we've been making. And so high, lower high, lower high, lower high, lower high, rejection, right? Like just smack down. And this would be the path that I think that we would take. And what would that look like? Well, again, using our fibs there, we could do, instead of this, just kind of like a linear fib, we could do some type of, kind of a wave fib, right? Wave fib, some type of a trend fib, which could perhaps take us down to the 1.6, pardon me, 1.618, and then perhaps retest the support area that we are breaking down from, because of course we pushed into that area for liquidity, and so we can slice through that. We've already proven that we can slice through that. If we push even lower, maybe down here to the 1.618, and then perhaps retest it. So that could be a potential bounce point around there at 17.9. And what would that line up with, Alpha Fam? Okay, that would line up with one of these wicks that we had over here, and you probably can't see it. It's extremely faint, right? But I have a little dashed line ever since that area. Let's see if I can just change the color. There we go. Yeah, you can see that lines up with this little wick that we had right there. And so that would be the 1618. Okay, and so for just from a wave structure, we could potentially get down there, maybe retest bearishly the bottom of this teal box, which has supported us at 18.2, supported us here at 18.2, and so that's been basically our little local support area for this formation. And then what do we have? We have the head and shoulders essentially coming into effect, where the measured move for it is down here at 17,250, which would also be in line with this. Let's see, why do I feel like I'm lost here? Come on. Where's my price action? There we go. Which would also be in line with the with making a lower low, right? Lower than that June low. And since we've seen like on the S&P 500, we've seen on the Nasdaq, we've seen on all of these different indices that stocks are traded on, we've seen a lower low put in. I would just suggest that Bitcoin has the possibility to put in a lower low somewhere around here, around 17,250. Now, a lot of guys are saying like, oh, we could just drop all the way down, but I don't think that's true. I think probably we're going to end up just making some type of bullish divergence with whatever low we end up grabbing locally here. I'm just suggesting 17,250 because we have that measured move. But I do think that eventually we'll probably end up working our way lower. It's just that we could have a nice bounce off of this if we do have some type of bullish divergence, and depending on what's going on in the markets at that time, okay? Because, like I said, that 75 basis points is already priced into the market, and so what would we really suggest is going to push us lower? Um, I would suspect that October could still be rather pumpy, okay, guys? And maybe we get some type of a nice move off of it. Whether we break up now or whether we find our way to a lower low, build up some type of bullish divergence, and then kind of pop off perhaps with the markets as they protect themselves in some type of Uptober. Now, we do have this kind of bearish kind of distribution, kind of I don't know, whatever you want to call it. Okay, there's something going on here. It just doesn't look that great. And so we do have some type of measured move off of that one as well. And of course, that could take us as low as the bottom of our range. So once again, we're talking about that $12,000 to $14,000 area, maybe kind of a wick down here. And so if we do have just, you know, just just kind of a rectangular, let's just call it just a range breakdown, type of a rectangular range breakdown, we could be looking at that 12,000 to 14,000 dollar area eventually, and where we do see that we have some pretty good support at 14,000, just in terms of this structure, not it's not like super strong support or anything, but we do have support just in terms of the structure. And then, of course, from there, we would have to be talking about this next range where perhaps, 10,000, 11,000, or perhaps, somewhere in here. I don't know. We can talk about this area later on. I don't want to analyze that right now. But guys, that's what I'm looking at for just based upon price action, based upon the fibs, based upon the history of our price action. So just this is what I'm looking at. So there you go. Let's go ahead and just take a look at some of the other factors that we might be having going on here, like our volatility. Our volatility on the daily is still extremely low, and you can see that we've had another reversal on our breakdown. So on our volatility here, so we had kind of a pump, kind of a breakdown, pump, breakdown, pump, breakdown, and so this thing is just pushing to extremes again, and it's just not getting to that threshold. You can see I set my threshold at around 20% that I know for sure that move has been going. I also use the double band, this dotted line here to suggest where it could be breaking above. We really got a rejection off of that, off of these little dotted lines that I have out here. And so we just haven't confirmed the move yet, okay? So we are looking for a huge volatility spike to eventually bring us to the other side of this range, and we're just consolidating right now. This is just consolidating, consolidating, consolidating off of the daily here. Now, for the 4 hour, we actually did have this nice crossover on the 12th, right? And that did give us hugely volatile price action. Everyone was very shocked at how price action has been behaving. But ever since then, we've just been contracting again. And so we're going back into this consolidation. And so the 4 hour and the daily are both just contracting right now, but they are both reaching extremes. And so this one just ticked up a notch, actually. So, there is the potential for them to explode again. If I go ahead and take a look at the 5 day, 5 day is still contracting. 2 day is, 2 day is on the floor. So 2 day is ready to go. This is actually a very powerful signal here. So the 2 day is just ramping up. And so, guys, something pretty explosive could happen any day now, okay? Like literally any day. And we are seeing price still pushing up a little bit. That's 19,285 now. So if we look at our just at our little price action, so we are just pushing up here. It's not as exciting as I thought, but this thing could easily dump down. We do have that resistance at 19,400-ish, as I said previously. But guys, I am looking for some type of powerful move to come up. And while the 4 hour, you can see that 4 hour volatility, just boom, boom, like it's just a lightning bolt, like just crazy, just craziness coming off of that 4 hour volatility that I was showing you here. Let's go back to the 4 hour just so that you can understand that what I'm talking about is no joke, guys, right? Like this is for real. And so you can see that 4 hour volatility right here came to a maximum low and just boom, that was that just crazy price action, right? Boom. And of course, we also had a volatility low right here and just boom, like we just like went all the way to the next level lower, okay? So we just pushed through an entire range, right? An entire little mini range there on these 4 hours. And this one just skyrocketed us down and then up. This was actually 1, 2, 3 little ranges there. Okay, I mean I don't want to call it a range, but like major supports. Okay, so through 3 major supports there, and now we're just consolidating within this area. So just to give you a perspective. So if that's the 4 hour, if that's what the 4 hour can do, guys, just imagine what the 2 day can do, right? Like we could get some very significant price movement if that 2 day, let's jump over to the 2 day, does end up exploding. And I can show you the last time we had some type of like extreme volatility here, we got that pushed all the way up to a 25,000, right? Which was a nice 40% move, right? Oops, what am I doing here? Okay. And also, when we had this volatility low right here, we just dropped all the way down, right? And this is based upon the 2 day, guys. That was a 40% move to the downside. So again, like the fact that we have this super low volatility on the 2 day, that's quite dangerous, and it could also be quite exciting. So unfortunately, volatility is direction neutral, and we just don't know which direction it'll go. If we do throw on our EMAs, what we can see is that we are scooping up a little bit, right? We are cradling a little bit, but we don't have any positive orientation on our 2 day EMAs, not on the significant ones of the 9 or the 21. Again, we would really have to get above that 19,800 area and definitely above that 19,400 area for our EMAs to be pointed in the right direction. If we look at the daily, again, these things are pointed down. We are starting to get into the right area for the 9 on the daily, but it's just not doing anything right now, guys. So this is just neutral to a slightly bearish. On the 4 hour, I'm sure that we're squeezing because we saw a little bit of price action going up. Yeah, we are getting a squeeze here, but we're also having that limitation area of 19,350 on that 89. And then there's also the 200 up here, kind of guarding the key areas that we have to get above that 19,800, that 19,900 kind of area. We have to get above that, but unfortunately, the 200 is just guarding it right now. You can see it's kind of front running it. So even if we spike above, we're not likely to get above that yellow line with the 200 there, based upon the 4 hour squeeze that we have going there. Let's go ahead and take a look at the weekly. And you can see that our weekly EMAs, it's underneath the 4 EMA, and so that's quite bearish. We could easily just reject down once again and perhaps hit my level of this 19,900 and 50 down here. Let's see, where was my projection off of these waves? And then we also have that expectation of around 17,000 250. But we'll see. One thing that I do like is that we do have the 300 simple moving average right here, right at that 19,000, 17,900-ish level. And so if we do end up using that area as kind of a support, perhaps we get a little bounce off of that or something, just like what I was saying actually. So let's go ahead. Let's just mark where the 300 is right now, right? Like the 300's right there. Let's go back down to the 4 hour. And the bottom dashed line is the 300 simple moving average. And then what was my fib? My fib suggestion was that we could bounce right in this area. And so look, what if we bounced right off of the 300 simple moving average? So just taking it from an EMA's perspective instead of fibs now. If we bounced off the 300 moving average, we just bumped our head into resistance, this teal box right here, and then we continued our way down to that 17,250. With the 300 simple moving average there, it does make this setup that I've outlined here that much stronger of a case to be made. So yeah, let's look for that. Let's look for that. EMAs and also my fib retracements here do suggest this type of perhaps wave structure. Let's go ahead if we don't get the bullish scenario, right? But you understand what we have to do to get the bullish scenario. Let's go ahead and move on to momentum. Let me take off these EMAs because you get the idea. And for momentum, let's see, where are my momentum boxes? Got my momentum pools up here. Got a new fresh one for you. And so if we can take a look at, oops, I need to get this underneath price action. There we go. Yep. No, that didn't work. Let's see here. There we go. Okay, now you can see the price above the momentum pools. Look, what you can see is that my daily projection, when was the last time I did an update? I think on Friday, right? Something like that. And so, of course, for the daily, we did just lose the bottom of the momentum pool. I'm on the 4 hour, and so we had to close a daily candle above that momentum pool. And what you can see is that we completely sank under my momentum pool, and so it's losing that bottom. Of course, what did I tell you guys? That's bearish, right? You lose the bottom of the momentum pool, it's bearish, you're drowning. And so on a closing basis, we did not close above the momentum pool. There's nothing bullish about that. We are just either swimming in the pool or drowning. And as it happens, we drowned, we violated the bottom. And then what did I say? We had this 2 to 5 day projection, which is inherently weaker and less and foggier than the daily projection, because the daily projection is pretty strong for a 24 to perhaps 48-hour play, but at least for 24 hours, that's a pretty strong box. And then the 2 to 5 day projection, it does give us a little bit more buffer room, but at the same time, it's a little bit more vague, right? So it's kind of like that kind of quantum theory. You can measure something, right? You can measure where something is, or you can measure its velocity. You can't measure both, right, in quantum physics. And price action is sort of like that when you're doing these type of projections. So I can't really plot the course, but I can give you some type of position. You know what I mean? That type of thing. And so just using these type of momentum pool projections, you can see, guys, just boom, we hit the bottom of the 2 day projection. We kind of swam around in it, 2 to 5 day projection, kind of swam around in it. We hit the top of it, hit the bottom of it, and we're still swimming around in that projection. And so I didn't have any need to update this weekend, because we just re-entered the same levels essentially that we were dealing with over here, and the 2 to 5 day box was taking care of business perfectly fine. Now we did lose the 2 to 5 day projection just briefly, and you can see that we did almost lose our level. We could have easily fallen to the bottom of this range. But for whatever reason, Mario got another life, and so they started to play the game again, right? So these billionaires have plenty of coins to put into the video game in order to play another session, and there we go. Just these ones are expired now. We're pretty beyond those momentum pools. So my updated momentum pools, which again, this is good for 24 hours, that dark blue box, and then this white box is good for 2 to 5 day projection. You can see the first good news is that we're underneath. The 2 to 5 day projection is underneath the blue box, so that's kind of bullish. And then the second good news is that our price action right now is above the blue box, which is good because if we can hang on there or we can close above it, then it just implies that we're recapturing some momentum to the upside, which you can see that through price action. But of course, to hold it, we want to see a close above the blue box. Now, this 2 to 5 day projection, like I said, it does give us a little bit more buffer room because the 2 to 5 day has to hold, right? Because in 2 to 5 days, these are going to be the levels that just based upon my projection, right? Just based upon my math, these 2 to 5 day levels are significant over the next, few days. And so at least we can play around in this area, and I'm not going to be terrified. And so, what would I suggest for our type of signals here? Well, just these are the previous signals that I gave you. And look, what you can see is that, look at this. We had a perfect rejection from this bullish bias that I gave you, right? And so, guys, like these signals, like they're no joke. They really are working out. The system is pretty much working out. And so I think I may just continue with this type of a system. If I just update it for our current momentum levels, then what I'm going to say is that to be bullish, we need to get above this one. It's funny how the bullish bias is now where the bearish bias was previously, and that's just because overall our price action is going down, and so to be bullish, it just takes less effort, right, than before. My bearish bias obviously is going to be at the bottom of the 2 to 5 day. I mean, I could put it here. I would just want to think philosophically how I want to deal with this system. So just on a daily basis, if we lose the bottom of the daily, it is going to be fairly bearish. So I'm going to put that there. And just based upon the 2 to 5 day projection, then very bearish underneath the bottom there. You can see the light blue price number over here goes to the bullish, the pink goes with the bearish, and the red goes with the very bearish, and then the green goes up here. So for this very bullish, I still think that we have to take out this level, to be honest. It's so far away. It's just so far away, right? And so uh let's do this. Let's just take out this little high that we had here, and then I'm just going to be a little bit more bullish. Now, where's our second boss actually? Okay, yeah, that does correspond with our second boss, just this midline here, and so that could suggest that we could swim to the top up here. So at least for a daily basis, I'm going to be bullish on there. Now, guys, you have to understand that this is just for the kind of like daily trading. To be really ultra bullish, we really have to get above here, and we're just nowhere near there, right? Like it's almost a joke, to be honest. So yeah, you know what? I think I'm just gonna stick with my guns on this one, and I'm gonna say yeah, I just have to leave Uber bullish up there. We're just so close. Okay, we're getting so wedged into this thing, and the risk to the downside is so high. Like, I don't want to give any false signals. Yeah, if we're back here, then I can use the lower levels for bullish because look, we can have like one of these huge pumps, right? Like, look at this huge pump, right? And so, of course, I can use like the lower areas for these type of huge pumps. But as we get wedged into this blue box, which just can smack us down, right? What did we have? Rejected, 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 right? If we get these type of rejections, then I just can't I can't in good faith put an uber bullish signal below this yellow box. So now that we're getting wedged in, definitely going to put that one up there. But still, I can have some type of a bullish bias as long as we're over this blue line. And I would just expect that we're going to play to the downside if we lose my 2 to 5 day projection. Now, I do want to double check these things with some of the momentum that I track. And so I'm just going to give these things different names. So right off the bat, we'll use the white momentum. And so for white momentum, how's our volatility here on the daily? All the way at the floor. But this 2 day looks more exciting to me. So I think the 2 day, because of our volatility, I think the 2 day is really what I'm going to be looking at. You guys just see this volatility right on the 2 day. This is what's going to give us that really powerful move. And so when I'm considering where to set my Ono levels, like I really don't want to violate our 2 day levels here. So I'm going to just bring this down to around 18,950-ish. Let's go ahead and see. Yep, this line would be definitely bullish for our white lines. Let's take a look at our blue lines. For our blue momentum, yeah, yeah, that's also going to be a danger zone for our blue momentum. So this has lots of confluence right here. Let's take a look at our green momentum. These are just various types of momentum that I track, guys. And so I'm just trying to build confluence with momentum because I'm trying to create a momentum trading strategy. And so I'm just looking at various different styles. And so far, my momentum boxes, these momentum pools, have been working extremely well, okay, on a predictive basis. Not just descriptive, but predictive basis as well. Not the most powerful thing, but in combination with EMAs, powerful, okay? And so for a daily basis here, yeah, I'm gonna move bullish just up a bit. And this one encapsulates that. Hmm. Hmm. This bearish level, I may have to move down. So this is the wonderful thing about looking at these different types of momentums. Like I can fine tune my signals here quite a bit, actually. Okay, there we go. And I think this is a strong reading of our momentum. And so let's go ahead and jump back down to the 4 hour. And what I can say is just based upon all the types of momentum that I track, um, let's see, if we get above 19,900, then of course, you know what I want to do? I want to look at our weekly EMAs also. Just to double check that. Just to double check that. Yeah, yeah, that's important. Yeah, that 9 weekly EMA, that is important. So I am going to lift this up just a bit. And also our bullish bias could be lifted up here above the 4 weekly. That would get me a little bit more bullish on the higher time frames. So I am going to fine tune that based upon EMAs, guys. Let's see. Let's see, what was this fib structure that I had here? Now the fib structure was basically if we get above this 786, we could potentially see more. And so, yeah, that uber bullish does go along with there. Okay, guys, there we go. Sorry about that. I am trying to just modify this system and try to create something a little bit more reliable there. But let's go ahead, turn that off. Go ahead and turn that off. And there you have it. Let me get rid of my support and resistance, and also the second boss. And just for our key levels to watch on Bitcoin, just kind of raw and unfiltered here, this is what I would be looking at, okay? So if you want a bullish bias, then we're going to look for over 19,300. If you want a very bullish, like I'm talking about kind of potentially macro bullish, Bitcoin, then we're looking for above 19,950. If you want to start having a bearish bias, we're going to be looking at 19,145. And kind of like critically bearish, I am going to be quite concerned under 18,940. And of course, that's based upon all these different types of momentums that I track there. Yeah. Oh, there's some interesting confluence down here as well with some of my momentum measurements along with the EMA, that 300 simple EMA, and then also this kind of fib projection. So this does look like a pretty critical area for that last kind of wave structure down. And then we could catch ourselves as low as 17,000 just based upon momentum here, if we do move to the downside. All right, guys. So those are your key levels to watch for Bitcoin, and also your analysis of price action, right? Volatility, right? Momentum, EMAs, all put together in a sweet little package for you there. That was your alpha for the day. Stay safe and happy trading.